perfectly. The 10-year yield, this is the most important chart in the world right now. It looks like a head and shoulders top, working back off, ticked up a little bit higher today. The key fear, what you're finding, ladies and gentlemen, what's going on? Any company with debt is selling down. Why? Because you had the Fed speakers out being a little hawkish again, and you had the Fed minutes, which were from weeks ago, when all the inflation prints had been hot, and we've since had more rational inflation prints since, spooking people. And you saw the odds of a cut come down from 58 to 51%. So people get worried for any companies that have debt, their ability to refinance, et cetera. Ladies and gentlemen, I can tell you one thing. We are seeing signs of slowing. The Fed will be cutting once or twice this year. And once that is playing out, all of these companies are going to rally like nobody's business. And we've seen spurts of that last quarter of last year, in recent weeks before this recent choppiness. All you need to do is watch the 10-year yield. This is going to work back down below 4%. If you remember when it was up at 475 or something again, everyone was saying it's going back over 5, and I said it's going to go below 4 before it goes above 5. And we stand by that. It's rolling over, and it's going to work down even if you get some head fakes along the way. The head fakes are on purpose, ladies and gentlemen. That's how it works. So here, this thing will head fake back up to here probably. Everyone will start talking 5 again before it reverts back down to 3, 8, and change. And everyone will say, what happened? The dollar, same story, rolling back over. Remember here, everyone said the dollar's going back to new highs. We said, no, this is a counter trend rally. Sure enough, now it's hit this trend line. It's going to test this, fake everyone out, maybe shoot up a little bit before it reverts back to 99 and then lower.